You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it is time to rock out once again with everyone's favorite bi-weekly option show. Yep, it's that time for the Option Block. My name is Mark Longo. Happy to be with you here on this Thursday, April 18th, right around noon Central, 1 p.m. Eastern, which is our go live time. You can get us there every Monday and Thursday, noon Central, 1 p.m. Eastern. Of course, after the fact on your podcast player of choice. I saw someone sharing a Podbean link to our stuff the other day. That's just so funny how far our stuff gets out there on all the different platforms. You don't even host with Podbean, but they direct to it nonetheless, which is kind of funny. So however you get it, we don't judge. Just make sure wherever you listen, if you like what you hear, throw a little review there. It's always fun, and it helps the algorithms and all. There's so many platforms out there now. It helps people discover it, especially if they're outside iTunes. It's always helpful stuff. And I'm sure, of course, make sure you keep those questions coming. We do like to hear from you guys. And joining me on the old program today, first, we got the Meatball joining us in a little bit. He's off hither and yon, fashionably late as usual. He'll be joining us in a few minutes. We're also joined out in the hinterlands of Chicago by the one, the only Uncle Mike Tussaw from St. Charles Wealth Management. Uncle Mike, how are things, and how did the old meetup go? How were the gyros?
Oh, they were phenomenal. But we all agreed that it is best to go to the world headquarters of the Option Block for the free food that you'll provide for all of our listeners as well. Turnabout is fair play, Mark.
Oh, you mean so when I get the shipment of Skippy's gyros and lemonade from you that I then provide to the audience? Oh, that's very nice of you. Very generous. Your generosity, the generosity of Uncle Mike, it knows no limits, listeners. So by all means, come here to the studio. You can check out the cool new Boba Fett plush we just added to the studio here. So all sorts of fun stuff happening. And also joining us on the show, a newcomer. We got a newcomer holding down the Fidelity hot seat today. He also gets the points. He gets the award for the coolest name of our co-host here, Konstantin Vrandopulo from the Active Trader Strategy Desk over there at Fidelity. Konstantin, welcome to the Option Block, sir.
Thank you so much. Thank you for having me, guys. Wanted to say I was listening in a few episodes ago, and I just realized that I don't have a cool nickname like all of you do. My colleagues call me KV for short, so That's the best that it gets for me.
Oh, no,
I guess.
we can do a lot better than that. In fact, I was thinking, I love the name Constantine. I'm a bit of a historical buff. In fact, I just recently went down a huge rabbit hole. I resubscribed to Audible, and I went down a huge Byzantine Empire rabbit hole, many hundreds of hours of different audiobooks around the history of the Byzantine Empire, and another like 20-odd hours of the fall of Constantinople. So, Constantine Paleologus was the last emperor there, Constantine the 11th. So, I don't know. It's only your first appearance, so it's early to have a nickname. It takes a while for me to kind of figure out what works for everybody. I'm kind of the arbiter of nicknames around here. But I don't know. The last emperor is kind of a nice ring to it. I'm just going to throw that out there for now. The second I heard Constantine, it kind of just got me thinking along those lines. I could digress into the history of the Byzantine Empire for hours and the fall of Constantinople. I know that's what you want to hear. The audience not really tuning in for that, though, Constantine, as cool as it would be. So why don't you tell us, as a first-timer on the network, what is your background? How do you come to this? And what is it that you do over there at the Active Trader Strategy Desk?
Yeah, it sounds like I got some big shoes to fill here, not only in the shadows of my colleagues, Trey, Brian, and Colin, who you guys have already met, but the Emperor. And so it sounds like, me and you probably have a little bit more that we share than just trading markets and trading options. A little bit about myself. I've been with Fidelity. Obviously, all of us on the strategy team do the same job. I've been with Fidelity for about 8 years now. I started in the retail side of the business the whole time. Started on the high net worth team and transitioned over to our active trader group. And I've been on the trading strategy desk for give or take now a little over 3 years. So, obviously, trading is a passion of mine. I definitely enjoy trading on my own. I've been trading for clients for quite a few years as well here at Fidelity. So excited to spend the next hour with you guys.
And you have big shoes to fill, because as soon as you're done here, you have to go off and effectively recapture Istanbul and rechristen it Constantinople. So you have a lot of work ahead of you, sir. So you might want to rest up. You have a busy day ahead of you. And we have a busy day, because it's time for us to get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is the portion of the show where the name kind of says it all. We break down today's action going on so far today. Like I mentioned, we are the 18th, few days after tax day. Hopefully you guys in the U.S. at least all got your taxes in. And we're coming into one of those weird days here. A lot of people here in the U.S. have been waiting with bated breath for the results, the Mueller report out there, and the full version of it. Now it's a hotly divisive issue. People are waiting for that. So the market's kind of waiting for that as well. Of course, we're also heading into the shortened trading week here, Good Friday, a market holiday here, at least in the U.S. So shortened week here as well. So that combo kind of combining to make things relatively quiet. It kind of depends where you're looking here. For how much action you're getting. The NASDAQ coming into today. Usually NASDAQ's kind of leading the charge. Today it's almost literally unched on the day. Got S&P once again playing the Goldilocks porridge roll up about roughly 0.2% or so. And actually old school Dow leading the charge to the upside. Not quite 0.5%, but pretty close. So again, kind of depends where you're playing in the marketplace, what kind of day you're having. And all this kind of long weekend plus the kind of relatively lackadaisical move to the upside means VIX cash kind of trending lower. Coming into showtime, it was right around 12.25 there, which puts it pretty much almost exactly half a handle lower than where it was at this time last show. Let's go around the horn. Let's start. It's his first time, so we'll give him pride of place here to good old Konstantin, a.k.a. the man who didn't split the Roman Empire, but he at least kind of founded the eastern portion, and then later on, of course, was the last emperor. So many different routes we can go with that. Also, a great character from DC who fights monsters, I believe. So all sorts of ways we can go with that. But instead, Konstantin, what's lighting up your tape, and what are Fidelity customers up to today, sir?
Yeah, so taking a look at the orders by Fidelity customers today, obviously the NASDAQ exchange is very busy today with a couple of new IPO listings. So Pinterest and Zoom claimed the leaderboard today. Pinterest, by far the number one on the list right now. Obviously, the stock is up around 27% out of the gate. Buy orders definitely exceeding the sell orders here at Fidelity. So 86% of the buy side, 14% of the sell side. Zoom, pun intended, zoomed higher off the open, 76% higher. Also, around 88% to the buy side versus 12% to the sell side. Some of the other pundits, of course, that we commonly find on this list, Qualcomm's been in the news, Apple's been in the news. So those are at the top of the board here. One of the names that I actually saw and wanted to mention today and talk about a little bit more from the technical perspective and the options trading perspective is URI. URI is United Rentals, obviously industrial equipment rental company, reported its quarterly earnings. Definitely surprised to the upside, and obviously the stock price is reflecting the good news. It's up, anywhere, depending on where you caught it in the range, between 7 and 9%, trading right at 136.03 right now. In terms of Fidelity customer orders, it was actually pushing a little bit towards the sell side, 67% sells to 33% buys. This was as of around 12 o'clock Eastern Standard Time here. So in regards to the technical view, if those of you in the audience out there today have charts in front of you, you could probably follow me along. The stock has been under substantial pressure over the past year. So year over year, if you look back during that 1 year time frame, going back to last April, stock is down around 25%. So no question has been under pressure. The earnings announcement 2 quarters ago, which happened on October 17th, led the stock to actually gap down substantially from its closing price of about 139.04. And basically for 6 months since then, the stock has been trying to carve out a bottom. It went as low as $94.28. It hit that low with the broader markets on December 26th. And then the first Q1 rally in 2019 got it right back up to that post-earnings gap of October 17th. So we got up to 139. Traded there for a few days, right at that previous support, now sort of resistance level, filled the gap, bounced up supply, sold off nicely. So it went from around that 139 area to 110. So here we are, Q1 earnings. The stock actually hit that same level of around 139 on the opening rotation here today. So a few things for what does it mean for the stock for now. Obviously, it broke above its short-term downtrend line that I have connected from the September highs of 173 to the March highs most recently, 138.50. It is now trading above that trend line. It is definitely trading above its 20/50 and intermediate to long-term 200-day moving average on some very positive momentum. So the question is, of course, will the stock have some legs? Whether it can break through this level and get above there. The short-term resistance area, we could call it somewhere around the 139 to 142. It had trouble there before. We'll see how it acts in the here and now. On the options side of things, some interesting activity there as well. Options markets and URI are probably not the best in terms of liquidity, something to keep in mind if you're thinking about trading. Those of you in the audience probably understand what I mean by that. It doesn't participate in the penny pilot program. It means that they're expanded weekly contracts, but it trades in nickels up to $5 and in dimes $5 and higher in premium. Its 30-day implied volatility has come down substantially today. It was around 44% going into the earnings event. Right now, on my last look, I see it has a 28 handle on it. So a pretty nice drop in implied vol, and that obviously should be expected. Generally, is something that we should expect as options traders post earnings. About two calls to puts traded, 22,349 contracts in total today. 90-day average volume, however, is only 6,700. So you definitely are seeing some activity there. Some definitely activity in the call side of the marketplace. So that's something that I found interesting. It definitely will be a stock that I'll be keeping my eye on for the next couple of weeks to see how it behaves. See if there's any particular flow that we'll be able to see in the options markets going forward.
Constantine, bring in the thunder on his first episode, and that's our show, listeners. There we go. Thank you. I'm just kidding. But that was good. That was deep. I like that. Is it a requirement for all you guys on the active trader strategist? Do you all have to be technicians? Is that part of the deal?
It is actually part of the deal. Yes, we all have to go through our charter market technician designation. So. It's a part of the game. I think it's definitely very important. We like to look at charts. What can I say?
There you go. Well, yeah, I have noticed a definite uptick in technical questions since Fidelity became a part of the show. So it's definitely resonating out there with the audience. The audience would always write to us, and we would always be like, yeah, we don't care about that stuff. So now they have you guys to bug. So I'll look forward to them bugging you endlessly with your technical questions. All right, let's go on out to the hinterlands now. Uncle Mike, sir, what is lighting up your tape in the realm of St. Charles as you polish off the last of the leftover euros there, sir?
Got it. No, I think that it is good having Fidelity on for the technical aspects of it, because I'm not the resident technical analyst anymore, seeing as I looked at a chart once when I was in college. And
yeah.
so
10 years ago, you saw a chart.
The analyst. So, yeah. So that's good. The other cool thing about Fidelity is that we have very cool names. We got Konstantin. We had Superman on the show the other day, son of Jarrell. So that was actually very exciting as well. So I'm loving this. This is a really cool thing. But in terms of the marketplace, a lot of things it feels like things are getting ready to go on. Not a lot going on today per se, but a lot of things getting ready to go on because of the fact that I think we have the holiday week this week, so not getting a lot of action today. But one thing of note that a few things have been lighting up my tape. Apple is above the 200 mark again. I think that is whenever you have the $100 mark, that's always a very key number to look at. It looks like it's staying above the 200 mark for now. It'll be interesting to see as we go into
Mike,
earnings season.
Mike,
yes, sir.
Which mark is the $100 mark and which is the $200 mark? Mark Sebastian or Mark Longo? That was kind of my first
I'm at
question.
least the $1,000 bill mark if you're going to go.
Are you the $1,000 mark?
Yes.
Yeah, Mark Longo's he's the pre-split mark. He's pre-split.
And Sebastian's more of like the the Pabst Blue Ribbon mark. He's on that level.
World's greatest beer to 1893, I believe, is what it says on the can.
Yes. Cans don't lie.
So, but anyway, we have the Apple being over the $200 mark. So that's going to be something interesting to see if we can hold that going deeper into earnings. My beloved metals are rather steady over the course of the last week. Financials have gotten a boost from the earnings from Bank of America, I think in particular. What we had the other day, XLF is around the 27.5 marks. So I say the word mark a lot. I'm learning right now.
You do say the word mark.
So I am seeing that. And the other thing of note over the course of the last few days has been the pharmaceuticals with IVB down pretty significantly, as well as now I'm going to say another one that sounds like Merck has taken a little bit of a beating recently. So it looks like we have some news coming out potentially on the healthcare for all, and that seems to be hurting the stocks in that sector. So with all these things going on, the fact that we are going into earnings season, or getting deeper into earnings season, I should say, of course, the next few weeks, I think it'll be interesting. Also with the fact that the S&P seems to be kind of a magnet to the 2,900 mark. And
it does.
if we can get through that, like we were talking about on the show about a week ago, the next level of resistance, I believe, would be all-time highs, roughly 40 points from here. So I feel the market is getting ready to do a lot of things, but still needs to get ready a little bit more right before as we get deeper into earnings.
Speaking of getting ready, Mr. Meatball, you've had a lot of time to get ready, to prepare your thoughts, sir. What's catching your eye out here in today's relatively quiet end to the trading week?
Yeah, so I got to say I'm shocked at the response to Zoom. I mean, I know it's a great product, but I don't think anybody was expecting this. And so, I mean, I'm not sure I've ever seen the kind of price action that it's had. You know? It's just not, this is like 2000 era type IPO pricing action. It's just not something you see a lot. Pinterest, you know, I got to say I like Pinterest better than I like Snap. I think there's more to it. But let's talk about volatility. You know, they, as we maybe might have expected, the Mueller report was a big nothing burger. It was basically a big, you know, it was like everyone was excited for this big, delicious, hot, juicy steak. And the Mueller report ended up being a hot, juicy turd instead. There was just literally nothing to it, and nothing we didn't already know. And so vol kind of collapsed. Everybody's already left for the weekend. That's kind of my understanding. So there's not a lot of volume today. What I'm seeing in VIX, you know, I've seen a few interesting trades go up. You know, we can talk VIX and spike expiration yesterday. They were the lowest expirations in a long time. VIX settled 11.71. Spike settled 11.67. So they actually were. So for those that are like, you know, that seems kind of low. Well, it kind of got confirmed by spikes that VIX settle was proper. So, you know, just kind of a fascinating, you know, kind of how everything has played out this week. But we are seeing some interesting action. There was a big buyer of the December 3100, 3200 call spread earlier today in the SPX. So, you know, the bulls are out in force, but you know that's kind of been the bulk of what I have seen. Nice little expiration play that I saw today. A customer bought the 25.5 puts expiring today, and for 8 cents, and they're killing it on those.
Yeah, those are looking good. Yeah, and you're right. We're not going to have a chance because the market's closed tomorrow. We're not going to have a chance to discuss VIX and spikes this week, at least. Mm-hmm. So this is kind of your fix for VIX this week, listeners, and spikes. And you're right. The settlement wasn't. It's interesting to see, you know, at expiration how they are kind of lining up so well, spikes and VIX. So maybe that'll go a way towards mitigating some of the concerns people have whenever there's a new product. Right? How do I wrap my head around it? How does this thing work? Seeing that it is kind of moving and not quite in lockstep, but pretty close with what's going on in VIX action, I think will help allay some of those concerns. Speaking of VIX, coming into showtime, he said it was about 12.25, off about half a point. A lot of paper lighting it up here this week, kind of interesting. We'll have earnings, move reports for all that fun stuff on the website, theoptionsinsider.com, for Netflix and everything else that popped off earlier this week. So go check all of that out. So people are still trading Lyft out there. Lyft is, you know, Zoom's a big IPO today. Mark mentioned it, ticker symbol ZM now. It's a cloud conferencing platform, effectively. You're not familiar with it. They're supposed to price at 36. They end up gapping up to 66. So, you know, take this IPO fervor with a grain of salt. We all saw what happened to Lyft. It's now down in the 50s, below the 60 handle after getting up north of 80 very quickly after its IPO. So that post-IPO euphoria can fade very quickly. Actually, I was out there right now, the big trade, looking at the big prints in Lyft out there. There's a big trade yesterday, or 2 days ago, actually, 10,000 of the OX 62 half calls, which is kind of interesting. There's 11,000 open there now, but 10,000 opening. And then I went to dig in, see what the heck actually went up there, and it looks like it was calls in stock. Looks like they picked up about 10,000 of them for 6.25 right off the offer against about roughly not quite 500,000, 450,000 shares of the stock at 57. An interesting level there to do the stock. So would you like that, listener? You want to buy 10,000 62 halves for 6.25 versus 57 stock? I don't know. That's interesting. We'll mull that over. Looking at here really quickly before we dive into the odd block. What else was lighting it up today? VIX doing about 162,000 contracts coming into Showtime. Excuse me, SPY a little north of a million, about 1.13 million. And then what do we got? SPX a little bit half shy of 600,000. The Q is about 410,000. IWM about 170,000 out there. The big tickers coming in to Showtime on the equity side. Number one, let's go number one, Apple, 275,000. Number two, Qualcomm, $1.65. Number three, Bank of America, $1.25. Number four, Netflix, no surprise there, $1.20. Number five, good old Tesla. So kind of a usual suspects up the top five there, rounding out the most actives there. All right, let's keep on rolling here. Like I mentioned, the earnings Netflix report. Let's see, do we have it? Do we have, no, we have earnings move, actually for 18th. Let's see if we have the move results reports for Netflix. I do have it, here we go. So yes, and you can find this for yourself over there on the website, listeners. But Netflix going into their earnings was about $359.5. They were pricing in not quite $25, $24.70. They actually delivered. This is rare for Netflix. Underwhelming by a large margin. They delivered shy of $5, $4.66. So a huge underwhelming performance from, at least from an options volatility and straddle performance perspective. Premium writers liking that one, at least so far. Let's see how we're looking right now going into Showtime here. It's still about 360, 359.5. So actually, it is exactly unched right now from where it went into its earnings. So I can't remember the last time we could say that about Netflix, that it was unched several days later after an earning. Usually it goes somewhere. This time, so wow, this is almost a best case scenario. Premium writers going into a long weekend, things unched right now. If you stuck to it, you kept a lot of what you harvested there. So that's probably about a best case scenario there for a premium, right? Meanwhile, it's best case scenario for us to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get odd, we get weird, we get wild. Doesn't get much weirder or wilder than Tesla put paper, particularly the mystery put paper. Easy for me to say. Say that 5 times fast. Mystery put paper. Tesla mystery put paper. Mr. Meatball, I know you're going to be surprised by this, but there's going to be a lot of sad campers today in Tesla land. Does that surprise you, sir?
Yeah. Not at all.
Not at all, exactly. Another day that ends in Y, sad Tesla put traders. Because I'm looking right here, Mr. Meatball, and of the top 10 positions that are open right now in Tesla, the top hot positions, 2 of them could easily fall. In fact, 4 of them can fall into our mystery put category. Actually, 5. I'm going to say it's top 5. All top 5 positions right now in Tesla are mystery put, quote unquote, and 3 of them are going out today, going out on the 18th. So we've got the par puts, 63,000 of those bad boys open right now. That's the number 1 position in Tesla right now. So yeah, those are gone. I'm going to go out on a limb and say stock 274 right now. Probably not going to hit 100 by close, but yay, you never know. And then we've got the 50 puts right behind that, number 2, with about 50,000 of those bad boys. Hey, those are gone too. So now we're at over 100,000 contracts, open interest. That's going the way of the dodo. Then we go all the way out to Jan for the par puts and 50 puts, 38,000 and 38,000 of each of those, actually, respectively, still open. So those still have a chance. They got till Jan of next year. And the number 5, Mr. Meatball, the comparatively far more reasonable 260 put, which has much more of a chance. And there's 30,000 of those open. So those aren't quite mystery. Those make sense. So I'm going to go on a limb and say a lot of those are short. So people are probably happy those are going out worthless right now. But that goes to kind of show, too, Mr. Meatball, just how rich some of this CDS paper is, how these guys can just throw away premium willy-nilly on very near-term, far out of the money puts in Tesla, and they're still laughing all the way to the bank, probably.
Yeah, the return on Tesla bonds is so high that you can afford to go out and buy a bunch of these puts and, feel pretty confident that you're not gonna lose you don't mind it. It's just like in why kind of VIX guys don't mind paying up for VIX stuff is because it is hedging off something that has more edge in it that probably trades over the counter, right? Most people can't buy Tesla bonds. So people that own a lot of the credit are extremely happy people. And so they hedge it.
Yeah, you can afford to throw 50 cents at a clip at these things every now and then. The surprising thing about these were very short term. Usually you see them playing them out a year or so, maybe 2 years, year and a half. You don't see them playing a couple of months or even a couple of weeks in this case, which was kind of made the April paper that much more interesting. Far more of a mystery. Speaking of mysteries, Mark, I know when you wake up in the morning, you have your coffee, you do your morning routine, all that kind of stuff. And then the first thing you do when you start checking your tickers, like everybody out there, you pull up LBTYK. I know it. I just know it. I don't even have to ask you. I know that's part of your routine because frankly, it's what we all do, right? Of course, if you're living under a rock, of course the ticker is Liberty Global PLC Class C shares. Yeah, that's where we're going next here in the odd block. Brace yourselves, listeners. Liberty Global. Let's see what's going on with this one. This one right now, 26.5 right now, off about a quarter, nearly 1%. This is the name that a year ago was trading right around $31. It got up to its 52-week high about a week or so later, and still in early to mid-April of about 32 and change. And that was probably it. That pretty much peaked for the year right there. And the rest of the year was kind of a long, slow drift down to its nadir there around 19 and a quarter. You can probably guess what day that came on. Yep, Christmas Eve, like most other names out there. And then it's had a nice little rebound from 19 and a half all the way up to 26 and a half. So a nice 7-handle run over the past few months here. So let's see what we saw out here. It looks like the paper, at least in the option space here, looks like we actually have a theme here to today's odd block, which is kind of interesting. But let's kick it off here. Looks like someone's thinking the party ain't over in everyone's favorite name, LBTYK, picking up 19,561 of the July 30 calls for 55 cents. This is lifting the offer over there on, this is my X, I think it is. 55 cents, 19,561 times. Clearly this is opening. This is not a name that puts up a lot of paper. There is earnings between now and July. It looks like on the 6th of May, but I wouldn't classify this as a pure earnings trade. This is more just pure upside mania. Mr. Meatball, first off, how many times a day do you check LBTYK? I'm guessing it's a lot. And then B, what do you think of this upside call fervor here for Liberty Global?
Sometimes these small ones see a lot of action. I think I want to say I heard this one being talked about on CNBC the other day. But, sometimes these small ones, that's telling you something. This thing might get hot. Who knows?
Yeah, we've been getting hit up by a lot of people about this one lately. So it seems like it's on a lot of people's radar. All of a sudden, people saying, "Hey, did you see those calls on Liberty?" So yeah, it's on people's radar, and now it's on our radar. So guess what we're going to do, listeners? We're going to mark this to be watched, and we're going to keep an eye on this one, and we're going to come back and see how this one performs. Again, out of the money, crazy call paper. Not the craziest thing we've seen here, but kind of is what we expect here on the odd block. But still, this one is outlandish enough, sizable enough, and just weird enough of a name to warrant further analysis, further watching. Let's go on now to a name we talked about before, Las Vegas Sands, ticker symbol LVS. Trading today, kind of quiet, up about 20 cents, right around 68.11. But this is the name over the past year. Let's see, a year ago it was trading 74.5, so a wee bit north of where it is right now. Got up to not quite 82, 81 and change in the mid-June. And then it kind of like our other name, kind of just trended to the downside ever since then, hit a low of around actually 47 back on, guess when? Christmas Eve, right around that time, right around the Christmas Eve nadir of the market, 47.39 actually, before rebounding nicely again, about 20 handles back to where it is again, 68 and change. So it's been a nice run for this one too. Let's see what the options paper is saying today. Spoiler alert, looks like more people thinking the upside partay will continue in force. We got 67 halves in September going up today for $4.70. So pretty much once again lifting the offer 13,500 times this time. This was opening over there on the Gemini. Earnings are on the 24th of July, so there is Go figure. An earnings cycle between now and September. Probably could squeeze a couple in there. But still, yeah. So opening call love yet again. We're 2 for 2 here, Mr. Meatball. This time in Las Vegas Sands. And actually, these are 67.5. So that's a lot different than our last trade. A lot different than our usual opening call paper because it's not some crazy upside. This is crazy at the money. So that makes it a little bit more interesting, Mr. Meatball. So we got longer term out to September, this time at the money, size opening call paper in Las Vegas Sands, sir. Mr. Meatball, what's your spidey sense telling you?
It's some sort of long-term position that, someone is establishing that they think Sam's Las Vegas looks pretty good for a while. And so, I'd say this is pretty bullish. Could be some sort of stock replacement play.
That is fairly bullish. I think that qualifies as fairly bullish, yes.
Yeah, you think?
I think the guy likes himself some Las Vegas Sands. Let's see if our final one here. I think we're keeping the party alive here. I think we're 3 for 3, Mr. Rock. Almost said Mr. Rock last time. Mr. Meatball. I apologize profusely. Let's see where we're going for our third victim here. Honeywell International Inc. Ticker symbol HUN. H-O-N. Trading today 168.5. Up a fair amount. 560 or about 3.5%. I'll have to check if they had earnings today before they open. Go figure. So that's why they're rallying. And what did we see today? We saw, let's see, first off, really quickly, let's go back for the year. A year ago, Honeywell, 147.5, so about 20 handles shy of where it is right now. It peaked pretty much right now, where it is right now. It got up to about 166 in October, then sold off aggressively down to 123 and change back around Christmas Eve. And now it's rallied up again to near its high, which is about 169 not too long ago. So we're at or near those 52-week high levels. But someone, once again, 3 for 3, thinking the party shall continue to the tune of 3,000. The May 175 calls going through the offer this time. Got to go through the offer to get done in HUN. Almost 35 cents. They were offered at 34 cents, picking them up 3,000 times. Again, earnings were today. Total volume on the day is 12,000 contracts. So again, not all of that could be part of this trade, but a lot of size on these May 175 calls, near-term out-of-the-money calls, OI, only 47 contracts, so all opening paper. Mr. Meatball, what do you think here? Tons of opening near-term upside paper in a name post-earnings. What's your spidey sense telling you?
Maybe I'm thinking some call, maybe some call overriding now that things have gotten, now that there's less uncertainty, You
think they're selling them? That's a good print if they're selling those. That's a I want their broker.
I don't know. But it could be one of those, the broker charges them $1 million commission, but or they really liked earnings and they think it's going to keep going. That would be the other reason. But I wouldn't be shocked if it was it was quietly a sale. That would make some sense. But post earnings, obviously could be a call buy, and they like the earnings and they think the party's gonna continue.
I think the party shall continue. Meanwhile, this party will continue as it's Thursday. It's time for you guys to take the reins with some of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's do it. Your turn. Time to answer your Qs. They can come in a variety of different ways: social media, email, our website, the live chat, all sorts, our app, all sorts of ways you can get at us. And you guys like to take advantage of those quite frequently. Let's see what we got here first. First, let's go out to Fidelity land. Let's see what the Fidelity customers have on their brains. Let's go, I don't know, The Last Emperor. It kind of rolls off the tongue. I'm kind of liking that, Konstantin. It's not that early. It's usually not on the first appearance that a nickname just springs to life with me. But this one, I don't know. It's feeling kind of good. So, let's just try it out. Mr. Last Emperor, what... It brings a smile to my face. I like it already. Mr. Last Emperor, what are the Fidelity clients? What are they up to? What do they want to know these days?
Hey, I feel honored. Thank you. on the first appearance. I appreciate that, guys. So what are Fidelity clients talking about? Obviously, we have quite a few interactions on the daily basis with our clientele. A common topic right now is trading options around earnings. I mean, we're in the midst of the earnings season, it definitely should be a topic on people's mind because we are going into next week with some heavy hitters out there that are reporting, some S&P heavy hitters. So I'll start probably by paraphrasing a good friend and a colleague of mine, Mr. Robert Kwan, which hopefully you guys get to meet one day. But, he says that when you sit down at a table across from a guy who pulls out a deck of cards, right, what should be the first question that you ask? And the idea is the first question that you should ask is what game we're playing, right? The game is the same. I mean, you're trading options. The only difference is that the stakes are higher. By that, we mean that, options premiums are generally higher going into an event. So it's something to analyze, something to keep in mind. So in the end, they're calls, they're puts, you can buy them and sell them, right? It's as easy as that. The question always is, how do you structure the trade based on the environment that we're in? So I have, going back to kind of basics, I have, a few common sense checklist items that I go through. So you always start with your outlook, and I don't only mean it for the direction of the underlying you're trading. I mean your outlook on implied volatility as well. What do you think is going to happen to the premiums once the binary event is passed? I suggest, obviously, everyone in the audience today find a broker that allows you to easily analyze price and volatility. It's paramount to your trading strategies. If you're looking for one, come to Fidelity. We'll take care of you. We've got great tools and resources for that. Make sure you're analyzing the time frame that you're trading in. Suits your outlook, suits the price outlook, suits the volatility outlook. Understand that each expiration on the board has its own implied volatility parameter. Very important to keep in mind. Short-term options going into earnings versus intermediate or long-term. That is, a classic mistake that we see people make generally. Make sure you understand the importance of options liquidity, and you guys, as professionals could probably attest to that as well. The importance of options liquidity really kind of kicks in, and it strikes home when the trade goes against you, when the price action and maybe volatility parameters that you were thinking are going to play out actually play out in an adverse way. It never hurts as bad when the trade goes the way or in your favor, and you're having to get out by giving a little bit up. It doesn't hurt. When it hurts is when you're wrong and you have to give up a lot more than you should be based on the fair price and avoidance of that slippage there. So think about it from the risk first, profit second perspective. That's kind of a motto of our team here on the strategy desk at Fidelity. Always make sure that you're modeling a few strategies ahead of time, thinking about them from that adverse move. To me, when I'm thinking about my trades, it always brings it back to, keeping me in check in terms of the size. If I'm thinking about risk first, profit second, always keeps me in check for the size of the position that I'm taking on. And then finally, of course, that's the final step is placing the trade. I would say that you should definitely never skip any of these steps. Believe me, all of the pros that I've ever met, all of my colleagues have some sort of a mental checklist. Maybe it's not a written one. Maybe it's not notes that they're making on paper, but it's definitely a mental one. Why? Because at the end of the day, only if you take these steps to get to the trade that you're thinking about, you would know how to act once new information comes in at you, right? New information comes in, what do I do? How do I adjust? When do I get out? You can only answer those questions if you've done the prep work ahead of time, right? So remember, there's no best strategy. I always get asked this question, very frequently, I would say, by clients. What's the best strategy? What's the strategy that you like the best? There's no best strat, right? There are buyers and sellers. For every trade, there's somebody else on the other side of it. So The best strat is the one that takes advantage of your outlook in a most efficient manner. So I will ask you guys, do you guys have some sort of a checklist that you go through, something similar to what my thoughts are?
Absolutely, I do, and I think everybody should. And I'll tell you, that's with all trades, not just like, event trading. Generally speaking, I try to avoid events. I feel like that's, if your specialty is in implied volatility, then, most of the time you can be at an advantage. But, these binary event type of thing, there's such a crapshoot, it kind of takes away your volage. So I'd rather trade a bunch in front of them or a bunch behind them or a bunch after an event and then skip it. That's kind of where I land.
Yeah, that's a lot of our hosts and pretty much our network comes down. Especially we talk about earnings. We've said it many times on this show and other shows. The analysis, the numbers we crunched from ORATs don't really lie. It's pretty much a literal crapshoot. It's around 50-50 the odds. Everyone always asks us, should I be long premium? Should I be short premium going into earnings? It's a literal crapshoot when you work it out. One may work a little bit more over time, but then you have the blowouts that come back to wipe you out, so it kind of evens out in the end. So yeah, it really depends. We've said it before. We've cautioned you against trading the earnings. You guys love it anyway, so we can't stop you. But there are savvier ways to go about it, and we've outlined those many times in the past. And again, check out our previous episodes and keep an eye on those earnings and movie reports because those give you really some good details on how these things break down over time. Let's see if we got this. It's such a cliche. I don't usually allow these types of questions on the show here, but it's coming up to that time of year. I guess we can always say, hey, it hit 70 degrees in Chicago yesterday, so clearly summer is here. We're getting the summer questions already. I wouldn't have allowed this one on because it's such a cliche, but the handle is just too good. This question came from the Giddy Franciscan. I have in my mind just conjured up the image of a very happy monk who sent us this question. And he's also, it's all very well written, so he gets points for that. The Giddy Franciscan wants to know, sell in May and go away. What option strategy benefits from the profound market malaise that occurs over the summer? I love this guy. This guy is, he might be my new favorite questioner, even though it's so cliche. It's so well written, great handle. I love this guy. This guy is my new favorite. No offense, Konstantin. I like your name too, but this one just takes it to another level. All right, Uncle Mike, sir. This is kind of falls into cliche territory, but we're heading into that time of year, so I anticipate a lot more of these questions coming in. Let's just head them off right now. When your clients call you up, let's say the Giddy Franciscan is your client, and he calls you up and says, Uncle Mike, it's sell in May and go away time. What should I do? What do you recommend, sir?
I say don't trade off sell in May and go away, because I actually had a client once ended up leaving me because I wanted to see the proposal from the other advisor, and there was some fund that actually did sell in May and go away. It became more heavily into bonds in the summer months and more heavily into stocks in the winter months. And so what bothered me about that is that the risk profile was way off, and it was one of those situations where she was told options are risky, and that she needs to do something along those lines with a proven track record. And so I guess that was one that left a real bad taste in my mouth. And needless to say, the client actually is back with me now. So apparently it didn't work out too well in that situation. So I think that every year something needs to be different. And what I mean by that is that, yes, we are on a 100-year bull market. I've said that before on the show, and I still believe it. And I think we need to trade off of it. But bad things can happen any time of the year. And if you have a risk-first attitude, then you need to kind of view things that way. Don't get me wrong, I'm all for seasonal analysis, but there's been plenty of summer rallies that we've all experienced just in our trading careers. And there's been plenty of January downturns that we've all experienced. So I think you need to have a risk-first mentality. And if you want to do seasonal analysis, that's fine. But remember, you got to have risk management before seasonal, technical, or any type of analysis.
Konstantin, you must get this question all the time. It's kind of like the cliche financial question, right? What do you say when people call you up asking you about sell in May and go away? Are you a believer of this?
I do get this question once in a while, Jim, and I do. And I always go back to the facts. I mean, this is where, you go back to the charts and tell people that charts don't lie. I mean, listen, you have historical evidence to look at. If you go back, last couple of years, the only time that I could probably think of this actually worked out without looking at a chart closely is 2015, because we did have a pretty rough summer in 2015, as most of you probably guys remember on the back of those Chinese news there in the month of August. But 16, was a pretty active and actually upward biased summer. Same thing in 17 and 18. So we'll have to wait and see if this one plays out any different. But I agree. In general, cyclical analysis could be done, but you gotta trade what you see and not what you feel or think.
And we'll see what we see when we go on around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, time to go around the block, tell you what we're watching for the rest of this week into the weekend. And spoiler alert, the week's pretty much over from a trading perspective. It's getting close to it. You got a half of the session or so left today, at least for most of the major equities and the options you guys like to trade. So if you have something you want to get done, today's the day to do it. You're already seeing the vol coming in. That's what you see usually going into these long weekends. So we won't belabor that point for you again. But let's go back around the horn. Let's go the other way. Mr. Meatball, we'll start with you, sir. What's on your radar, and what are your crazies watching as we come to the close of this shortened trading week?
Now, watching the earnings in the upcoming weeks, watching the S&P possibly making a run at the all-time highs, as well as after that 3,000, seeing if that's a possibility, and if not, seeing how we're going to manage risk for that. Also, we do have non-farms coming up in, I believe, about 2 weeks. So I think the combination of having that along this time of the year, and after all, it is sell in May and go away, so maybe we do have more coming up in May. I'm just kidding. So watching a bunch of things, and just watching to see, once again, what I was talking about at the beginning of the show, seeing what the market's getting ready to do.
All right, and Constantine the 11th, a.k.a. Constantine Paleologus, a.k.a. the last emperor. What are you watching for the rest of the shortened holiday week, sir?
Yeah, guys, I mean, first of all, I want to say have a good long weekend. For next week, what I'm going to be paying attention to most likely, the heavy hitter that's on the board on the 24th, reporting earnings, Facebook, kind of reminiscent about, the peak back in July of 2018, and then a massive drop in the stock. Stock has been obviously a lot lower. It's right back to that gap open there. So that was the largest market cap loss in the history of the stock market. So we'll wait and see what they report, how the stock reacts to that. So I'm watching that on the 24th. And then the GDP numbers for Q1 are coming out on the 26th. That's Friday, 8:30 Eastern. Would be interesting to see if we have a little bit of a pickup here from last quarter. That's probably going to move the markets a little bit on Friday.
All right, everybody. That music, unfortunately, means we've come to the end of another epic journey through the world of options. We talked all sorts of fun stuff. Got deep into some ancient Byzantine history there at the top. I couldn't help myself. It's fun. That's going to be our new show to the network, exploring the Byzantine Empire with your host, me. But that's a conversation for another day. Instead, let's go back one last time. Again, very rarely does a nickname. Your other cohorts in Fidelity are going to be very jealous now because none of them have nicknames. And Constantine, you've been on once, and you've already got a pretty sweet nickname. But we'll see. We'll see if it sticks. We're just trying it out for now. But Mr. Last Emperor, before we go, let's go back around the horn. What people are interested in what you guys are doing, they like what you're talking about here, they want to call you up about technicals or about what's trading in Fidelity, or they have a question about earnings, trading, or anything else, where should they go? What should they do, Constantine?
Yeah, absolutely. Give your Fidelity service team a call. Set up an appointment with the trading strategy desk. We'll be pleased to speak with you. Nothing is out of the realm. So whatever it is that you have in mind, if it's strategy related, we got you covered. So looking forward to speaking to everyone in the audience. If you are Fidelity clients, if not, hopefully you will become Fidelity clients at some point. So we'll get a chance to talk one-on-one. I appreciate you gentlemen having me on. It's been a pleasure. Pleasure to meet everyone, and I hope to make an appearance maybe sometime in the future.
There you go. We got a sweet nickname now, so you can't be one and done. You got to come back to merit your nickname. By the way, call the strategy desk, ask for the last emperor. They're going to say, who the heck are you talking about? It'll be a good time. Try it out. If you're not a Fidelity client, you want to kick the tires and light the fire, it's the place to go. Fidelity.com/options. It has it all broken down there, the commissions, the fee structure, the platform, how you can get in touch with guys like Konstantin and the rest of the crew, all of that good stuff. Tell them we sent you. They'll like to hear that. And that will be fun for everyone. And let's go around the horn some more. If you like delicious gyros, maybe you just like somebody to roll your puts for you so ahead of these long weekends you can go on a nice vacation. I might have a guy for you. Mr. Uncle Mike, sir. If they want gyros and someone to roll their puts, where should they go?
By all means, go to stcharleswealth.com or feel free to contact me through the information on the site. Would love to work with people if they are a fit, of course, if it makes sense for us to work together. I've been doing this for a long time now, and going on 10 years, actually, in July as an independent advisor. So, exciting times.
Happy anniversary to you, sir. And let's try one last time. Let's go back out to the global headquarters of the Option Pit. Let's see if we got the meatball back. Mr. Meatball, are you there, sir?
I am here.
There you are.
Good to be here.
I thought you got killed by the beans in the Costco while ago.
Yeah, I don't know what was going on. My phone kept coming in and out.
So if folks want to get a hold of you, they want to join your crew of crazies in the pit chat, where should they go? What should they do, sir?
Go to optionpit.com. Hey, we got our event coming up in June. You want to hang out with Mike and Mark, and maybe, who knows, heck, maybe the Praetorian prefect, Constantine, will be there too.
The Praetorian prefect. Now we're mixing our metaphors, but I like where you're going there. I like where technically the Byzantine emperor had Vikings for his guard. They were the Varangian guard, which is also cool.
Oh, I like that.
But that's a deep cut for another day. But yeah, if they want to check out your event, sir, where should they go? What should they do? Is it on the website they can register?
Right, it's right there, and come see me, come see Mark, and come see Constantine.
Come see Constantine with his Viking escort. We promise you all of those things if you come to Mark's event here this summer in Chicago. Check it out. It's the tastiest steak you'll ever have because it's on the meatball. Maybe he'll even drizzle some meatballs on top of it. It'll be delicious. OptionPit.com is the place to go. So in case you missed all that, it was Fidelity.com/options, OptionPit.com, and stcharleswealth.com are the places to go in between episodes. And on behalf of Konstantin and the rest of the Fidelity Hot Seat crew and the Meatball and Uncle Mike and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing to the program, for sending in such great questions, for joining us live, all the fun stuff that you do. If you are listening live, don't worry, we got you covered. You don't even have to take a break this time. You can hang back, relax, listen to a little bit of strategy courtesy of our friends over there in the Playbook land. And I'll be back in about half an hour with some of my cohorts there to talk some volatility, some analysis, some skew on the other side of the fence. Some crude, some metals, maybe some equities, you never know, maybe some ags, you never know what's going to hit it on TWIFO, so stay tuned for that in about 28 minutes. Otherwise, we'll see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.